Welcome back, economic enthusiasts. Today we're traveling back in time to 1947, the year India gained independence. As a newly independent nation, India's economic landscape was vastly different from what we see today. The country predominantly operated as a closed economy, with strict government control over various sectors. This period, stretching up to 1991, was characterized by protectionist policies, heavy regulations, and public ownership of industries. The Indian economy was on the brink of a transformation, a transition from a closed to a liberalized economy. This era, often referred to as the License Raj, was marked by sluggish growth and a lack of innovative dynamism. However, it's this very period that set the stage for the significant economic reforms that were to follow. So, buckle up as we dive deeper into India's economic evolution, starting with the new industrial policy of 1991. The early 90s, a pivotal period for India's economy. The year 1991 saw the introduction of the new industrial policy. This was a massive shift from the traditional system of tight controls and licenses to a more liberal and open economy. The policy aimed to enhance productivity and efficiency in industries by minimizing the role of the public sector and promoting the private sector. It encouraged foreign direct investment and allowed Indian industries to enter the global market. For the automotive industry, saw a significant boost with the entry of multinational corporations like Suzuki. Next, we turn to the new trade policy, implemented in 1992. This policy marked a significant shift from protectionism to openness. The policy aimed to increase competitiveness, boost exports, and reduce import restrictions. A great example of this was the textile industry, which saw a boom in exports due to the reduced trade barriers. Moving on, let's delve into the fiscal reforms of the 90s. These reforms focused on reducing fiscal deficits and stabilizing the economy. The government introduced value-added tax, or VAT, to replace the complex sales tax system, making taxation more transparent and straightforward. Now, let's pivot to monetary reforms. The Reserve Bank of India, or RBI, introduced several measures to ensure financial stability and control inflation. These included adopting a flexible exchange rate system and implementing prudential norms for banks. These reforms helped in maintaining financial stability during the Asian financial crisis in 1997. Next on our journey are capital market reforms. The establishment of the Securities and Exchange Board of India in 1992 was a significant step in this direction. The Securities and Exchange Board of India aimed to protect the interests of investors and regulate the capital market. These reforms led to the growth of the Indian stock market and the rise of companies like Infosys and TCS. Finally, we reach the recent efforts to phase out subsidies and dismantle price controls. These measures aim to reduce the fiscal burden on the government and promote efficiency. For instance, the gradual removal of the LPG subsidy has encouraged consumers to use this resource more judiciously. To summarize, India's economic journey has been marked by significant reforms and policy shifts. The new industrial policy and the new trade policy opened up the Indian economy to global markets. The fiscal and monetary reforms brought financial stability and transparency. The capital market reforms led to the growth of the stock market, and the phasing out of subsidies promoted efficiency. So, the next time you wonder about India's economic environment, remember this journey through its transformative policies and reforms. It's a story of evolution, growth, and a relentless pursuit of economic stability and prosperity. Having traversed through India's economic history, we hope you've gained a deeper insight into the nation's journey and the pivotal role of policy changes in shaping its economy. If you enjoyed this journey and want to keep learning about intriguing topics like this, don't forget to hit the subscribe button. Also, consider sharing this video with others who might be interested. Stay tuned for more insightful explorations into fascinating topics. Until then, keep learning and keep growing.